business. Okay, you put $1,000 in, and the whole business goes to you. All you can do is lose your investment. Okay, so but the general can then be sued for everything else they've got if they've done no other corporate protection. Okay, so unlimited liability, capital accumulation, not as effective of a corporation in raising capital as a partnership, but it's still better than a sole proprietor. Difficulty in disposing of partnership interests. Why are those troubling? Why can't you? What about partnerships that we just can't buy and sell shares? Yes. They're not liquid. Okay? They're not traded openly. There's not enough public information out there about them. And unless you find another friend, somebody whom you know, who wants to buy out that piece of the partnership, that's the only way you're going to do it. So it's not liquid. Okay? So disposing of partnership interests can be very tough. Lack of continuity, unless you have written documents of how the dissolution of this corporation, or excuse me, this partnership is going to go down. Potential for personality and authority conflicts. Here we go again, Tyrone. Okay, there we go. Okay, except now, not necessarily a marriage, but you got a three-way going on here or something, whatever they do in Wasilla. I don't know. I've never been there. Law of agency. Here's one of the other hazards of a partnership. This is probably a key element here that I've seen a few too uncomfortable many times amongst friends who've had partnerships and didn't quite take care of their business. Unbeknownst to the other two partners, the law of agency, any partner can buy the partnership to contracts because they're all three generals, aren't they? Every one of them has total liability, everyone has total control, and everyone has the say-so. They're on the checking account and they're co-signers on the checkbook, right? If you've worked it out that way. To come to work one morning at your business and find out that somebody just bought a new trailer. And we have a mortgage on that trailer. It's been encumbered, and they encumbered our piece of machinery to buy this trailer to haul their snow machines. And, okay, there should have been a consultation in there. So here's then when you start these issues over here, when you have binding partnerships and the law of agency. Types of partnerships include the general partner, which we're talking about. It has several generals. Limited partnership, one general and many limiteds. And limited partners are composed of at least one general. We just talked about that. Okay? Here we go with a limited liability partnership, also treated as limited status by the state. Again, these are all state issues. Federal government does not generate corporations. They're all state corporations. Okay? Cross between a partnership and a corporation offers many of the advantages of both, but not to the restrictions incurred by S corporations, which we're going to talk about here in just a second. Offers the tax advantage of a partnership, legal protection of a corporation, and maximum operating flexibility. So if you had a partnership, you might want to do an LLP. Okay? You're starting to see more of them now, LLPs out there, rather than LLCs. LLCs might be a manufacturing situation or my little puzzle business or something else like this. But an LLP is primarily for professionals. Bad choice of terms, as if we are all not professionals, but we're talking about, you know, doctors, lawyers, and dentists, and those kinds of professional, licensed organizations. Creating an LLP is much like creating a corporation through establishing the articles. You go in the state, you pay your $250, and you click the box that says LLP. Who are your three people that you're, you know, on your organization? Me, myself, and I. But you can't really have a partnership with me, myself, and I. You would surely stick with an LLC. But if you have 3 people, 2 people, or whatever you do, you list them, and you list their percentages of ownership of this particular business in the corporation. Okay? The C corporation is a separate entity apart from its owners. Ooh, corporations are now people. Right? Okay, corporations are now people. If Al were in here, Al would be going, yes, yes, I love what... And we're seeing the end result of it in our political world here on how the super PACs and all this other stuff, but we were not going to go down the the political field here, except that a corporation can do everything a human can do, except what? At this point. Steve? Well, who said it?
Somebody else said it.
Vote. And who knows what the Supreme Court will do in some future, allowing, right now the corporations are voting, and they're voting with their checkbooks. Okay, so they don't really need any more legal protection. So they can do everything that we can do. They can buy property, they can sell property, they can destroy property, they can create things, they can merger, they can own set up a corporation, they can sell businesses, they can destroy businesses, they can do everything that we can do except vote. Okay? So the C corporation. C corporations are creations of the state and are categorized either as a domestic, they're doing business strictly within the state, or they are a foreign corporation, conducts business in another state, or they are an alien corporation formed in another country. Okay? I never liked that term. You know, I think of invaders. Okay, never mind. The zombie apocalypse. I want to be involved in there. Corporations can be publicly held by many or closely held by a relatively small number of owners. We can have one or two if you want to deal with the S corporation situation. Process of incorporating includes certificate of incorporation in the bylaws. It's much more involved to start getting an S corp. Let's find out why. Advantages of a corporation include limited liability of stockholders, because the stockholders can only lose what they have invested in it, like a limited partner, correct? Okay, you can only lose. You own something in GE and they're making a nuclear power plants, and all of a sudden another one of theirs blows up, or they're an old Westinghouse plant somewhere, and all of a sudden nobody wants to, and GE stock implodes. Okay, so limited liability, you can't lose more than your share of stock. Ability to attract capital. Look what Facebook is trying to do with their IPO coming out, or Google did a couple years ago with their zillion billion thing. And every day you watch the financial news, and there's always somebody who wants to ring the bell at the stock exchange with some silly company that's trying to raise, you know, a couple million, $100 million for something that you've never heard of and never want. Ability to attract capital, ability to continue indefinitely. That's probably one thing that the corporation can do that we can't. You know, live forever. Okay, we can continue living on because of the shareholders and that kind of situation. Transferability of ownership. It's very easy because the corporation has liquid on the stock market. It has liquid assets out there that can be traded, and everybody knows the value on any particular given day or any particular second. If you're one of those people on your phone watching your portfolio with carpal tunnel thumb. Disadvantages of a corporation. Cost and time involved in the incorporation process. Unless you get that big, it's not wise to even go down the corporate road, because the federal regulations, the attorney fees, the accounting problems, Sarbanes-Oxley, you know, if you've heard of that thing, can be mind-numbing and cost you thousands, if not millions of bucks to try to stay. So your corporation should start small, and hopefully, if you get to the point where you got to go, I'm going to be an S corporation. Hopefully the S on your chest is not the scarlet letter, but it's the Superman letter. Okay? So time involved, double taxation. Remember, we're talking about corporate tax rates in the country right now? Okay? All political parties are backing around what the corporate tax rate should be. All right? So you're taxed at the corporate level, and then the money's passed on through you through dividends or through some other form, and you're taxed again at the personal level, aren't you? So this is the give and take, double taxation, potential for diminished managerial incentives. You now have a corporation, and your managers are, what's the line I put in the outline there right after that? I didn't put, there's no reason for them to, it's just a job. You own the company, but now you have salaried people working for you, and how many people have been in businesses where salaried people, you know, just phone in the gig, they don't care, they don't have the ownership capability that you do. You're the founder of this business. You know, your name's on the corporation. And here you got Joe Dude over here who's just phoning in the gig. Okay, part of this is you can lose that when you get the corporation where you get too big. and many end up doing incentives on, what did I put in the outline right underneath that? Something about incentivizing, there's terms, Rick has incentivizing your employees through either end of the year bonuses or things like this, or for profits depending on how the business does. So you're incentivizing the people to not have diminished managerial incentives, for them to actually go out and bust their butts and do a good job for you. Legal requirements and regulatory tape, whether it's filing the tax returns or dealing with Sarbanes-Oxley or dealing with all sorts of other things out there, the myriad of federal and state and local regulations dealing with corporations, S and C corporations, can be mind-numbing. Potential loss of control by the founders. Steve Jobs, we're beating him up. We're beating his dead horse all day today, okay? So, again, when he got kicked out of Apple, it's his baby, okay? And so there was a lot of, let alone being a great company, but probably Steve's ego said in the background, I'm going to fight tooth and nail to get that back, strictly because feeding somebody's ego. But we look at many other corporations out there. Coming from the music industry, I taught music business for a lot of years, and we look at some of the music companies. Anybody heard of Kurzweil? Ray Kurzweil keyboards? Or Moog synthesizers early on? Am I speaking a language, everybody? Okay, it's like... the point is that after a while, their companies got purchased out from under them. They didn't own their own name anymore, okay? And I find that ego-wise, as an entrepreneur, like the most heinous thing that could ever happen is you start this business, and it's a, what's your name? Richard. Richard. It's Richard's giant corporation. And then all of a sudden, Steve owns your corporation. Somehow, it's all legal and it all worked out. He bought all the shares, you went public, and it's gone, and he kicks you out because he doesn't like you anymore, and he's owning the property and everywhere, and he says, screw off. So you're gone, and you lose the company.
Well, that's what happened to my company. I don't own it.
Yeah. Ooh, snap! Ooh. Okay. There we go. You're going to learn your lesson here and never let that happen again. Potential loss of control. Excuse me?
Famous Amos?
Yes. Famous Amos lost his cookie company.
He didn't use his name.
No.
So
No.
he switched it around. Something about it.
Well, he took his small amount of bread and bailed into Hawaii, and Famous is doing just fine.
Yes, he is.
Yes, he is. Okay. S corporation, standing for small, is the same as any other corporation except that a distinction applies for federal tax purposes. Okay. The criteria seeking: be a domestic U.S. corporation. Okay. Not have a non-resident alien as a shareholder. No foreign companies. You know, we're starting looking at who owns, like, down in Long Beach, California, or city of New York Harbor. Some of those are private businesses. They're held. And you start looking at, wait a minute, the Saudi royal family owns New York Harbor. The Chinese now own Long Beach Harbor. Who owns, we start looking at, of these corporations, there are some rules to certain types of corporations. In the S, you can't have no aliens here. Have only one class of common stock. Everybody's equal. Okay, there's no, when we look at the demise of, like, the Lehman Brothers and some of those others, on who got screwed the worst, who gets paid off first when they go bankrupt? Well, it's the A stock people, and then the B stock people don't get in, the C stock people. Only the smart guys really started doing these so they could cheat people later on. Who has the voting rights of a stock, who gets dividends, and who's just there standing around with their pants down, okay? With here's my stock certificate. Okay, have a non-alien, only have one class of stock, limited shareholders, limit shareholders to individuals, estates, and certain types of trusts. That's who can own the shares in the S. Not have more than 100 shareholders. That's the key, which is why it's small, where it said small on that last page. Okay? Under 100 shareholders, you're not cranking it open to an IPO of a C corporation that has a zillion shareholders, but it's small and have less than 25% of the corporation's gross revenues during 3 consecutive years. Okay? So there's some requirements that you want to have when you start, if you decide to go the S Corp way. Advantages: retains all of the advantages of regular corporations, passes all profits through to individual shareholders. It's a pass-through to your personal tax return, so it's not double taxed. Okay? So the S Corp gets everything that a corporation does, small 100 shares, 100 shareholders, but passes the profits and or losses directly through to you. Avoids a double taxation, avoids tax paid on assets that have appreciated in value and are sold. So there are some other accounting mumbo-jumbo in there that, that those people do. Disadvantages of an S Corp: increase in individual tax rates above minimum corporate tax rate. There are some tax rate issues that you can get. Many fringe benefits cannot be deductible business expenses with an S Corp. Here were some of these, you read it in the paper. They end up in tax court. Okay, when they put tax issues, guy starts a business and takes no salary. Okay, but he's making $1 zillion bucks, but the business then has a lot of business deductions, like his wardrobe and his car collection and his airplane and his vacations. Those are all business expenses. No. And this is where the IRS came in and they said no, they were not legitimate business expenses. Okay? So again, he should have taken that and moved it into salary, been taxed on it, and then bought his clothes and cars. So there's a line in there somewhere where that kind of mumbo-jumbo can't happen. Choosing an S Corp while is important to optimize the advantage. If you know what you're doing, you can choose this one. But don't just stumble in there because it's going to be expensive. LLCs, like an S Corp, cross between a corporation and a partnership. Can have more than 100 members in your LLC. Members can be non-residents, avoids taxation, flows through to members, not subject to self-employment tax. It's not your business. It flows right through as you're not self-employed. It's just another income source to your tax return. So this is probably the handiest here for liability protection, ease of use. 250 bucks in this state. You can get it within 5 minutes on the Secretary of State's office. If you're going to set up your business, I had a learning curve when I first got up here, and I had a $250 learning curve. And God, I hate that when that happens. When it happens just within 5 minutes and you realize that you just had a $250 learning moment. Okay? If you're going to start your business in Alaska, do 3 things and do them almost simultaneously. In fact, go in and practice doing them so that when the time comes, you can do them within 5 minutes of one another. Okay? Started a business. What are the key things you want to have for this business? Domain. Yes. Name of your corporation. Business license. All saying the same thing. Correct? Okay, so, check my domains. Great, it's available. Snag that one. Business license. Went in and snagged that puppy. Corporation. Oh, shit. Somebody already has that corporation. Well, and I'd already, but no, excuse me. I bought the corporation, then went in to get the business license. Yeah. And so somebody already had that on a business license, and I wanted all 3 just for there, and I had to go back and start all over. I have this now bad domain that I had to make go away. I had to switch my domain. Went in and made sure all 3 were available at the same time and practiced. Can I get my business license and an LLC within just seconds of each other of grabbing this domain? You have multiple screens on the computer and you're going, okay, ready? They're still available. It's still ordering. Go, go, go! And so that's part of the deal. And so do that so you don't have that $250 learning moment. Okay. PC, professional corp, doctors, lawyers, concerned about malpractice. These are their professional corps, and you'll see when you go into the doctor, they'll have their name, you know, Dr. Cheetos, MD, PC. Okay? My doctor's definitely not politically correct, so that would be something else. Concerned about malpractice, they want to have that level of protection. They also might be, so this is going to give them that level of protection that they can buy insurance through their particular corporation. All shares must be owned by the licensed professional, and this has to do with must have a professional license. Articles must designate that the professional service is rendered. In your articles that you set up in your corporation here, You got to say, I'm a licensed dentist, I'm a licensed massage therapist, I'm a licensed, veterinarian, or whatever the licensing issues of your state are. So you could be a PC if you wanted to do that. Joint venture is much like a partnership, except the joint venture is formed for a specific and limited purpose. You and I we're gonna do a renovation on a piece of property, aren't we?
Sure.
Okay, we're gonna buy this thing. We're gonna buy it cash. Okay, we got BBMs, our big bag of money. We're going to throw down cash. We're gonna reno it in 4 months, and then we're gonna sell it. And after that, we're gone, aren't we? This is not an ongoing corporation. We're doing it for a specific venture. Okay, are we all kind of clear on that? And we need a time frame on that venture, or when things happen, because the joint venture has a starting date and an ending date of either a time frame or the completion of a certain task. They don't go on forever, okay? So this would be for specific things that you might want to do. And that be the end of that. So, do anybody have any questions about the infamous forms of business? Steve?
I get confused when you're talking about domain name of corp and business license with an LLC. Name of corporation, did you mean the same as name of company, or is an LLC a type of corporation? I'm not familiar with this stuff. So.
Okay, the LLC is strictly the legal protection, limited liability corporation, and you're doing it for the legal protection and the rights that corporation can, that structure, that framework of business can give you, okay? What I'm getting in with the domain, this is your internet domain,
right, that I got.
Okay, of having the same, right. So that people look at your checkbook, everything's the same.
The part that confused me is you used the word corporation, and I didn't know if an LLC had to apply just to a corporation, or if I just...
It is a corporation.
It is a corporation.
It's one form of a corporation.
I'm sorry, I missed that.
Okay, it's all right. Rick?
Scott, I'm wondering if you could talk a little bit about how to get rid of partners in a partnership or an LLC when the marriage goes bad. Maybe a shotgun clause or something like that?
Interesting concept. Generally, it's going to require the attorney, and I don't know, help me.
Well, one example is referred to as the shotgun clause, and so let's say Scott and I are in business together, and we say, we get married at first. We say, well, this is great, and
nothing was ever consummated. I swear.
We consummated. We made a lot of good puzzles together, and what happened was and I was going to help with marketing. He was going to make the puzzles and come up with the design. Well, maybe Scott sort of gets a little slack on the design. I get a little slack on the marketing. The economy tanks, and we're blaming each other, and now we hate each other. And so, if in the shareholders agreement, you can have something that's referred to as a shotgun clause, where I say, I want him out. But I say to him, I'll give you, and whatever I offer to him, he has the right to either accept it or buy me out at the same amount, which keeps me from cheating him. In other words, I'll give you $10 for this thing. And he goes, well, it's worth $1 million. And so it keeps me from underbidding to get him out. But once we enact the shotgun clause and it's in the agreement, the shareholders agreement, or the partnership agreement beforehand, once it's enacted, one of us is going. So you kind of get away from the animosity that can linger and destroy a business.
And the remembrance of the consummation.
Yes.
That would be quite troubling. I'm going to have a bad dream tonight, Rick. But the other thing, one last thing before we hit the.
No, I wanted to add to that too.
Oh, go ahead, Christy. Oh, about that or this?
About partnership.
Oh, go.
No, having been there, done it. Not unlike a marriage, you start out, warm, fuzzy, everything's going to be great when you live happily ever after. Business partnerships are the same way. Make certain you have an agreement. Having been there when it went south and not had an agreement, it can get incredibly ugly. And so it's worth putting the time and energy up front so that you both are clear on this is our definition of success and where we're going to take this, and when it goes south, because chances are it will, statistically it will.
Part of the other thing is we're seeing up here in Alaska with the 8A contracts that all the Native Corps go out and get.
Yeah.
What's the minimum that a Native Corp or Village Corp or other corps go out? They won't play unless they're the 51% owner, are they?
Right.
They'll only play if they are in charge. So if you're going to bring on partners, you've got to work that out, because going into a 50-50 deal here is ripe and rife for trouble. Okay? We get pissy with each other, it's 50-50.